investment strategies. This is not investment advice, it's just a few ideas on ways to invest and ways to trade in cryptocurrencies that you might want to consider. Okay, investing is what we call buy and hold, or hodl, as we talked about earlier. So investing and buying cryptocurrencies and keeping them for a long time is what this strategy is all about. And it's a great strategy if you understand blockchain technology and have real faith in the technology and the future of it. So it's fairly passive, long-term investing strategy, which means once you've done your research on specific coins and you've decided which ones you think have got a good future and are likely to increase in market value, then this is a fairly passive long-term investing strategy, which means you don't have to do a lot of work in the meantime. So to invest successfully, it's always advisable to dollar cost average the dips. And what I mean by this is cryptocurrencies have seen a lot of fluctuations in the past. And if you dollar cost average the dips, basically what you do is you don't put all your money in. You don't try and predict the bottom of the market and put all your money in at that point, because the chance of actually getting that correct is actually quite slim. It's harder than you think to do. So you just, when you think it's the bottom of the market, you just put some money in, and then if prices drop again, you put some more in, and if prices drop again, so you put some more in, so you kind of average out the dips. And it's quite likely that you'll average out a dip, you'll do the dollar cost averaging, but then prices will dip further, and you'll think, I completely missed that dip. So try and keep some money aside to keep putting money into these dips, because the dips may keep getting lower and lower and lower and better for buying. Okay, investing long term is really only good if you can hold your nerve in a bear market, because if you just hold your coins, just hold on to them through thick and thin, you will see probably some quite serious drops in the market value, and you'll think, oh my god, what's happening? You just got to hold your nerve in a bear market if you're intending to buy and hold. So historically, Bitcoin has seen some major crashes, and I think more will follow. I don't think we've seen the end of this yet. Bitcoin and other cryptocurrencies are not really very stable at the moment. They're very, very volatile. So by their very nature, we are going to see more crashes, which are a good time to buy if you're, well, I'm going to say in the next point, if you're patient, then just wait for the next crash. It could be weeks, months, it could be a year, but if you can wait for the next crash before you buy, that could be good. Again, I'm afraid I have to say this is not really investment advice. Doing your own research on specific coins and investing strategies is really what it's all about, and so you can implement strategies that actually suit your needs. So trading, this is kind of hourly, daily, weekly. It's not a strategy where you just buy the coins and hold them long term and just hope that the prices go up over time. This is where it's a bit more complicated, where you do day trading, where you buy and sell maybe multiple times in one day or multiple times in a week, trying to make money as you go along as the market fluctuates. So day trading or weekly trading, hourly trading is great if you have previous trading experience with maybe stocks and shares, and hopefully that trading experience was a successful one. You see, you look at this volatile market and it may look like it's easy to make money, because you in retrospect, when you look at the charts, you see the dip and you think, oh, I could have predicted that and I could have sold when it was high. But actually, when you're doing this in reality, it's not as easy as it sounds. I think you've got to remember that the whole cryptocurrency market is actually designed to take money from you. So you do have to be good to succeed with trading cryptocurrencies or trading anything. You do have to be good. You have to put a lot of hours in. There's this old saying, I think it's like, to get really good at something, you have to do something like 10,000 hours at anything to get really good at it. And you're not going to want to hear this, I'm afraid, but trading is like that. You have to put a lot of hours in. It looks easier than it really is. So this is going to sound obvious, but remember to buy low and sell high. And yes, the reason I've put this in, even though it looks obvious, is that people actually forget that. They get bogged down in the details of all the different indicators on the charts, and I'll talk about this in a later lecture, how to do basic technical analysis of a chart. and you can get bogged down in the detail, and people do just forget the basics. So that's what I'm trying to get across here. Just buy low and sell high. That's the key. That's the number one rule, and it's a rule that people sometimes forget. Also, if you're familiar with stock market trading, you'll have heard of stop losses. It's advisable to put these in place. So basically, if you buy a cryptocurrency and you think the price is going to go up, you put in a stop loss just to make sure that if actually things don't work out and the price does drop, it will automatically sell and you won't lose too much money. If a lot of people forget to put stop losses in and the prices drop, and they're like sit there hoping that the price will go back up, and sometimes it never does. So yeah, stop losses, tight stop losses, to prevent you losing much money. Okay, so the little picture on the right you can see there, that's from tradingview.com, which I'll explain in another lecture when I talk about technical analysis. It's a website and it's free to create an account. You can actually look at all the different indicators for different charts for different cryptocurrencies to help you do your day trading or weekly trading. Okay, dealing with bear markets. So when the markets are bullish, that's when the market prices are going up, increasing. Everyone's an investment trading hero. You feel great. The euphoria is in the air and it's contagious. Literally, everybody thinks they've made some fantastic decisions, and you can't lose. Money's flowing in. And normally it's because it's a bull market, and it's very difficult to lose money in a bull market, to be fair. But when it's a bear market and prices are dropping, yes, it can make you angry, frustrated, and broke. So you've got to learn to deal with bear markets. If you're convinced that the market is going to drop further in the future, then you could always sell back to your fiat currency, that's your pounds, euros, or dollars, and then just hope to buy back the currency when it's cheaper, when it's dropped further. And a lot of people do that, but it's all very difficult to time and to predict. Or you could just be brave and hodl. So you just hold on. If you're thinking real long term, your strategy could, I'm not saying it should be, I'm just saying in a bear market, your strategy could be just to hold on and wait till the bear market's disappeared and prices start to increase again. If you do decide to hodl or to hold on to your cryptocurrencies during a bear market, it's sometimes best just to walk away from it for a while, because every day you check your portfolio, you'll just see the prices dropping, and it'll probably just make you sad. So literally, people do just walk away, uninstall the apps on their phones that they use for checking the cryptocurrency price, just walk away from it and do something else with your life for a little while, because it's quite depressing in a bear market. It can be. And yet again, this is not real investment advice. It's a situation where you really need to do your own research just to understand how you would deal with bear markets and how you think you should, and use your own method. So yeah, there's just some ideas there. It's not investment advice. I'm not here to give specific investment advice, just some ideas that you might want to consider. Okay, so for my top tip, never invest more than you can afford to lose. Now, again, that may sound obvious, but there's a lot of people out there who have remortgaged their houses and all sorts to put into cryptocurrency, and I've read stories of specific people who have lost a lot of money. So never invest more than you can afford to lose. Nobody wants to lose money, but if you've got some money set aside that's been doing nothing for ages, it's just sat in a bank account earning 1% a year, and if you lost that money it wouldn't really change your life, then maybe that's the sort of amount you could be investing. But never invest more than you can afford to lose, because in the cryptocurrency markets you could actually lose it all, and you've got to accept that. So yeah, and this is because crypto is highly volatile and it's a speculative market. And again, you can lose a lot of money, so just be careful and don't invest more than you can afford to lose.